Welcome to my channel. My name is Alana McIntosh. I'm a real estate broker in New York. And today we are going to talk about renovation loans for investors and home buyers. Today joining me is Jackson Robert with Loan Depot, and he is a loan specialist in the New York City area, but he's also licensed in the 50 states. So, Jackson, thank you for joining me, and please tell us more about this loan product that's being offered.
Yes, thank you for having me. We have renovation loans, which is a great product for this time. There's that not that much inventory in the market right now. So if you find a property that may not be move-in ready or may need some work, a renovation loan is actually the right program for the individual, whether they be a first-time home buyer, uh, you know, uh, or investor looking to purchase. What a renovation loan does is that it allows you to acquire the property, right, and include the cost of the renovations. So it's called the acquisition cost, right? The cost of the purchase along with the renovation. So, and the down payment's based on the acquisition cost. So it's a great opportunity, great product for homeowners and for investors. And we have a great number of products, whether it's a 2 or 3K renovation loan, home style renovation loan, a VA renovation loan, or a fix and flip um, program for business purposes for investors.
Okay. So what is required for these types of renovation loans? Like, are there down payment requirements, credit requirements, um, you know, primary residence, secondary residence? Can you tell us more about?
So on the residential side, standard guidelines,
Okay.
right? So same guidelines for credit, income, assets, down payments, still the same. You can put down 3.5 on the FHA on a one family. You could put down 5% on a conventional. So it's basically the same guidelines. The only difference is that when say for example, you have a home, whatever the purchase price is, you would get a bid of the work from the contractor, and whatever that bid comes out to be, you add it to the cost of the purchase. So that total amount, acquisition cost, that's what your down payment is based on. So it's the same guidelines um, as any other um, program. In terms of investor, the business purpose loans, the down payment is a little bit more, but it's basically the same guidelines also.
Okay. So let's say a consumer or a home owner has an existing property and they're looking to scale up, for example, to a multifamily. Let's say they're in a condo or co-op or a single family, and now they want to purchase a two family, but it may be a fixer upper. Are they able to use this program um,
Absolutely.
under this guideline? Okay.
Absolutely, it's a great program for them. If it's a fixer upper, as I stated before, they whatever the purchase price would be, they would get a bid from the contractor. They would do their due diligence. Get a number of bids, select the one that they want to go with the contractor. That bid would be included with the contract to determine the acquisition cost. Um, they do also get a work write-up from a HUD consultant. HUD consultant's an independent third party that protects the homeowner and protects the bank to make sure that the bid that they're receiving is accurate. So that they're the ones who's going to be going out, checking out that the work is being done appropriately and timely as per the draw schedule that the contractor provides. So they go out and view the work to make sure it's being done accordingly.
Now, would a buyer need certain years of experience?
No, because they're not. No, if a home buyer is someone who's buying a residential property, it's whether the first time home buyers or a repeat buyer, they're not doing the work. They get to select the contract that they want. We just ask that they are licensed, have insurance, and experience doing that work.
Okay. And now let's say it's the reverse. Now let's say a buyer uh, has a multifamily. Let's say they live and occupy in two family or three family, and now they're looking to purchase a single family. Would this loan fall under that
Yes,
situation?
we could do a single unit property. If they wanted to purchase it as an investment, they can go ahead and do that. If they were looking to downsize, that's something that we could do. We just have to make sure we meet the guidelines.
Okay. And so what are the down payment requirements? Do they have to, can they use 3.5%, 10%?
3.5% is associated with FHA. So where they're looking to purchase a 1 to 4 family, it would be 3.5% down on the total acquisition cost for a renovation loan.
Okay.
If they're looking to do conventional on a single family, it would be 5%, and then it would go up if whether it's a 2, 3, or 4 family on the conventional side for primary residence.
Okay. And then are there any, can you tell us about the loan limits?
The loan limits is a standard Fannie Mae guideline loan limits.
Okay. So single family would be up to,
Uh, the single family, I think I can send you a link, but it's the standard Fannie Mae
yeah, I know.
guidelines, which is
Yeah.
right, for 1 to 4 families.
Okay. All right. Now, do you have any products or loan products for investors that are looking to do ground up development? Let's say,
No, we don't have ground up development. We have loan programs that allows an investor to purchase a property that needs to be renovated or remodeled,
okay,
but not ground up construction for renovation. The property is existing, um, and we have a great program for investors.
okay. And what about like secondary properties? Let's say vacation homes. Um,
The secondary, if it's a second home, vacation home, that would fall under our conventional guidelines for the home style renovation loan. So we would be able to do it that way. That would be considered a single residence. It wouldn't be a multifamily, it'd be a single residence.
okay. Do you find that there are more complications in terms of getting the loan with secondary homes, or
No,
yeah,
no, because the only piece that's being added is the renovation piece.
okay,
So, if you're looking at a property and you see that it needs work, what you're going to do is, do your due diligence, find, 3 or 4 contractors to provide a work write up, a bid on the work that's going to be done, select who you want to go with, and that's the additional piece. So it's no different than any other purchase. For us, we just look at it as a standard purchase.
okay. Now, what if the property may have a commercial overlay aspect or element to, let's say, if,
So if you're talking about a mixed use property, a
let's
mixed use, right?
yeah,
Yeah, a mixed use. It would have to be a primary residence. The mixed use, you're talking about maybe a storefront at the bottom. That would be under our FHA program, where we would be able to do that. The main thing is making sure that on a mixed use, that the residential piece is at least a majority of the square footage.
okay. Now, uh, in discussing the loan product for investors, are there any prepayment penalties? And if so, is there a time frame or not?
Yeah, well, each individual, once we take a look at at the um, the scenario that they're providing, we would put them into the appropriate um, program. Some may and some may not. For the most part, they don't have prepayment penalties. on the investor program. But that's on a, you know, I don't want to give a blanket statement on that. So,
Yeah, it varies from scenario to scenario.
right.
Okay. Okay. Awesome. And then, so are you seeing a growing demand for the investor loan products at this time, considering that interest rates have now increased?
Yes, it's something that, investors should be knowledgeable about. The more options you have, the better it is to manage your finances, manage your properties, manage your cash flow. So, once they find out there's a product like this that's available, they're very interested in it because it just allows them to manage their investments uh, a lot more accurately and appropriately, considering what other financing options that they typically would use.
Okay. Do you guys offer any no doc loan products?
No,
That's gone.
no.
Sorry. Okay. Okay. And how do you find, like, what are your thoughts on the market, and where do you see the market going for the demand of these types of products in New York, let's say, or New Jersey? Or
And the market's in transition. We've been in a cycle where we had extremely low rates, and that's changed. If you've been doing this for a while, you just understand that it's a cycle, right? That's going on, and we're just in a different cycle. And the best way to address that cycle is to be as knowledgeable as possible. The more information you have, the more product knowledge that you have, it allows you to provide each prospective buyer the appropriate product for them.
and their needs. Okay. And what about loan products for co-ops and condos?
Those are standard. That's not going anywhere. I mean, these co-ops and condos are a staple in New York, and we do those all day, every day. So, yeah.
Right. Okay. Do you find that, let's say, buyers are investing in apartments using the investor loan products to purchase co-ops as an investment, or condos? Is that trending?
Well, that I mean, in a co-op, that's going to be determined by the co-op. We do have the product that's available, but typically a co-op, you have to go by their bylaws and so forth, and but we have the program that's available. If they want to purchase it as an investment, so that the one unit family or single co-op or a single condo would fall under the home style single unit renovation loan.
Okay. Now, are there any, what are the budget guidelines for for the investor loan products? For instance, let's say, is there a minimum or a maximum amount that a homeowner can incorporate for renovations with their loan, with the existing loan to, you know,
Well,
renovate?
so the renovation is just going to be based on the work that needs to be done. You never want to over invest and over renovate a property, right? So um, that's what's going to determine the work, right? You're going to do. You always have your needs and wants list, right? What needs to be done and what do you want to get done, and you just have to be careful that you don't over uh, over renovate the property because then it would never appraise, right?
Right.
So yeah.
Yeah. So I guess my question is, let's say, for example, a home may cost uh, 500,000, and the renovation costs would be 200,000. Okay, and let's say the home does appraise, it's in a really, hot market, a hot neighborhood. Um, is there a guideline that the bank has set as
Typically,
budget?
right. So yeah, so typically on a single family, it's going to be tied to the Fannie Mae loan guidelines for a 1, 2, 3, and 4 unit property. In terms of the total renovation, if you're looking to do FHA, there's on a purchase, you can go up to a percentage of their appraised value, and on the home style, typically you don't want to go more than 50% of the of the purchase price. But things are always changing, so for each individual, always go over the guidelines when we get the contractor's bid to make sure that acquisition costs is correct, because ultimately everything always has to be able to appraise.
Okay. So, can you tell me, okay, for instance, let's say an investor is looking to pick up a short sale or a home that's in foreclosure. And let's say there are a number of violations and the house needs an extensive amount of work. What program would a property like that fall under?
So,
Yeah,
so
the
I
offer.
mean, uh, the anytime you need work on a property, right? If you want to incorporate that into the mortgage, that would be considered a renovation loan. If
Okay,
there's violations, we need to know what type of violations
okay,
they are. Typically, during the renovation process, you would hope to cure whatever violations that is. But I can't make a blanket statement that it depends on what those violations are.
okay. Well, that's good to know because I know I've had a few buyers ask me about what's the process to purchasing a foreclosure or a home that is in, that's a short sale that, does need renovation. And so it's good to know that there are loan products out there to meet this need and service this market, whereas they don't, traditionally would have just taken out a mortgage and then have to get a separate loan to do the renovation, such as a line of credit or hard money or some sort of secondary loan. So that's really good to know that this is being offered. Um, well, Jackson, I just want to say thank you for your time. Um, Guys, this is Jackson Robert with the Loan Depot, and he is a certified loan specialist. And Jackson doesn't just offer investor loans or home renovation loans. He also does mortgages for first-time home buyers and secondary homes if you're looking to purchase anywhere in the United States. And I will leave Jackson's contact information in the description so you can click, like, share, subscribe.